Hello everybody, welcome to the Technical Analysis webinar. My name is Troy. I'll be presenting this evening. As we get going, let's do a quick systems check. If you would, type OK in the chat box to let me know you're hearing me clearly and seeing my screen all right. All right, great. I see enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that all trades have risk. No one trade is guaranteed to profit. But the other side of that, obviously, is each and every trade you take has a good potential for profits. So we're all here, obviously, to go after that side of things, to try and do things in the best way possible to realize as much of those potential profits as we can. Keep in mind that as we go through the information, that it's meant to be educational and shouldn't be taken as financial advisement. And there are some things we'll go over that can help you manage your risk, some ideas and ways of doing that to make things a bit safer for you, hopefully as you go through your trading strategies. So real quick, what is technical analysis before we get on the live charts? Pretty simple. It's looking back at the charts, looking for patterns on usually what we're looking at are candlestick charts, looking for patterns in the history that hopefully help you predict what might happen in the future. And that's really the whole idea of technical analysis, whether you're talking about a market being overbought or oversold or trending or ranging or having breakthrough moves, etc. All of those sorts of things are part of technical analysis, and those are the things we look at as we're using different technical strategies to try and identify opportunistic entry points and exit points. And so we'll go through some of those strategy ideas on the live charts. I like to combine the technical analysis with our best take on what's happening fundamentally as well, because the fundamental picture tends to help you identify which technical movements are more likely or less likely to occur. So as you find opportunities on the chart, you may pass some up based on what the fundamental news is, and maybe you prefer other opportunities from different price levels based on what you know the news is, combined with your technical analysis. And so we'll go over those ideas as well. When we talk about manual methods of technical analysis, what we mean is drawing our own lines, finding our own support levels, price levels, trending areas, etc. Manually determining if we think, oh, it's time for something to drop or time for something to go up. Basically using our brains to look at the same thing that indicators are programmed to look at. But hopefully in a smarter way, as an indicator is pre-programmed, can't take into account changing factors, fundamental news, etc., that you can with your brain, which is why we rely more on manual methods of technical analysis than we do indicators in the webinar, because hopefully you're going to learn what the indicator is looking at and be able to see those things visually on the charts. And then later, if you add indicators in, they can assist you, okay? Someone's typing that the sound is off. So if you would, just give me an okay if you're still hearing me properly. Okay, thank you. I have enough responses. Okay, so I let Aneska know that it's something on not on our side, that maybe the settings over there need fixed. Okay, so at any time, if you have questions, you want to give input, let me know. I'm happy to share it or answer questions as we go along, as long as it doesn't divert us from the pathway that we're on. So what we're going to do is quickly look at some fundamental news and then jump on the charts to do our technical strategies, keeping in mind the fundamental news that we just looked at, okay? So what is and it only takes maybe 5 minutes, even less sometimes. What's the fundamental news picture today, right? Is there a preferred direction to trade? If we're looking for technical strategies, would we rather buy off the support level or sell off the resistance level? Are we looking for a breakthrough of the resistance or a breakthrough of the support price? Those sorts of things. We can go into an instrument already knowing which direction we might prefer, and then look for those entry points. So let's look at the fundamental news real quick. Wall Street rises as earnings whip up risk appetite. Okay, that sounds like positive news. Wall Street rises. There's risk appetite again, meaning people aren't afraid to buy into the stock market and get into things that sometimes can be more risky because fear is down. That's what that headline says. So that's a positive momentum headline. And we can see right here, US 30, US 500 in the green, those are the futures, and the actual market also opened in the green. Dow Jones is the US 30, S&P 500 is the US 500. The way they're listed here, these are the futures, and these are the actual market that opened, and everything's been green all day long. The only thing red is fear is down. The VIX volatility or fear index has been down all day, which means that headline is right. Fear is down, volatility is down. And we look at the dollar index, it tends to be weaker when there's less fear. And so the US dollar weakened a bit today. We can see the dollar index is down. So everything kind of lines up. There's fear is down, positive momentum has kind of been in charge today, but not huge. You know, the volatility index, the fear index isn't down 10% or 20%. It's only down about 3%, right? So moderate positive momentum today, but nothing real strong. We look at some headlines that might be pulling from some of the momentum, right? Supply constraints in the US. There's a problem with the supply chain in general, globally and largely in the US for sure. So there are ships off the coast of California, off the coast of Florida, just sitting there outside of the ports, these huge cargo ships with, you know, tons and tons and thousands of tons of goods, and they just can't unload them because there's not enough truckers. There's a shortage of truckers in the US. There's a backup of all of these products. Store shelves in a lot of areas are empty and bare because the supply chain is messed up coming out of COVID. Part of it is the next headline. Okay, US labor supply problems may outlast pandemic. What's a labor supply problem? In other words, there aren't enough people wanting to work. It isn't that there aren't people without jobs, but there aren't people for a lot of these jobs. The trucking industry, one, there aren't people lined up wanting to take those jobs. So employers are having trouble hiring people in the US specifically, and a lot of it has to do maybe with a lot of the stimulus money that was handed out. People haven't run out of that. Their unemployment payments were extended and were larger than normal. Free money was handed out with a lot of the stimulus in the thousands and thousands of dollars, millions of dollars, in fact, trillions of dollars handed out in the US. So, you know, if you own a business that pays maybe slightly above minimum wage or a lower middle income type job, you're having trouble finding workers. And, you know, truckers aren't making six figures in the US typically. They're, you know, it's a smaller middle class type income, and, you know, maybe people just are choosing to use up all the free benefits before they go to work. Whatever the problem is, the result is, whatever's causing the problem, I should say, the result is a shortage of labor, of people wanting to take jobs, and the trucking industry has really been affected by this, which then results in supply chain problems as well. So not only are they having trouble at the port getting stuff unloaded, they're having trouble shipping it across the country in the US as well by truck. So there are shelves that are bare, and there's a lot of worries going into the Christmas season, the holiday season, where there's usually record sales each year, that the supply chain problem will just get worse. Okay, so what started out as rosy picture, okay, the bank earnings have been great. You know, you go on to read the article, you know, Johnson & Johnson and Travelers and all these big names are expecting great numbers with their earnings reports, which makes Wall Street happy. And that's what's happening today. But there's an ugly side to things as well, which we just talked about. Home building stumbling because of supply constraints, labor shortage, some issues going on. So, and some worries still really about inflation. So you understand then when we look and we say the fear is down, but it's not way down. It's not down 10% or 20%. Like in a normal earnings season, you would expect, wow, with great bank earnings and other sectors of the economy showing a great earnings season, you would expect a larger, more robust rally today, and you just don't have it. So the optimism's there, but it's not huge optimism. And we see opposing headlines explaining why. Okay, so, okay, maybe that took us 10 minutes. I said 5. But now we have a picture of what we might expect to see. Some of the momentum maybe to fizzle out and pull back, right? And on some of the charts, we might see that already occurred. And maybe we'll start to see a ranging pattern where you see support levels holding, resistance levels holding, etc., if there's such mixed momentum. Okay. Now, I mentioned there are some special ways to manage risk with AvaTrade, and I can show you a couple. If we go to the trading platform options and we go to, say, AvaTrade Go, you can trade on your MT4 and MT5 accounts using our custom-made mobile app. And you'll see special risk management features. AvaProtect is available on FX pairings, gold, silver, where you can protect against any and all losses for defined time periods. Okay, so very cool feature, only at AvaTrade you see this, and you can protect it by the hour, by the day, etc., for a small premium cost. And so other features, if you program the take profit and the stop loss with prices where you want to take profit or have your stop loss, you'll see right next to it, it calculates for you based on your trade size and the price you enter, how much you're risking and what your potential profit will be. It even converts it to your account currency. So it doesn't matter if you're trading on Euro USD, if your account is in GBP or some other currency, it'll calculate your risk and potential profit into your account currency based on your trade size and the prices you enter for stop loss and take profit. So really cool risk management features. You also find those features on our web trader. So if you log in from here, you will find yourself in our web trader platform, which has those features and others. Henry, good question. The question is, will AvaProtect be available on indices soon? And the answer is maybe. I don't have a date, but we are looking to expand the offerings with AvaProtect. Okay, so keep an eye out for any updates on that, but currently not immediately. We don't have a date that more instruments will be added with the availability of AvaProtect, but it is in the works. Very good question. Okay, so for time's sake, I think we won't jump into the web trader today. You can look at other recorded webinars that I've done, and this one is recorded as well. And most of them, we go over the web trader platform. I actually reset the operating system on this computer and everything, and I haven't set up an account and a login on this system for our web trader platform. So for the next webinar, I'll have it running, but you can look back at other recordings. And we go through the web trader. I show you the AvaProtect feature, the stop loss take profit features, all of that. And there's some other advanced features if you log in here to our web trader, where we have free signals, free fundamental analysis done for you, and different stocks and such through Trading Central, which is available in the web trader from this login as well. So check that out. And if you have any questions about it, ask me in the next webinar, okay? All right, so let's then jump on the MT4 platform, which I do have ready with my new setup here. And I apologize if anyone tried to show up to my last couple webinars. We tried to move the date. We had to cancel a couple because of, in fact, exactly what I'm talking about. We had a new operating system installed, and it was a bit of a technical mess for me last week, but we're up and running 99% anyways now. This was just a thing on my personal computer here at work that had the issue. It wasn't a network issue. Okay, anyways, let's take a look. Let's do some technical analysis now that we've got an overview of the fundamental news situation. Currently, what do I have on here? US 500. Okay, so we're looking at 1 hour candles. So what do we see? We see an uptrend. Didn't we expect that before we looked at it? Why did we already expect to see an uptrend? Because we looked at the fundamental news. It's more positive than negative today. The volatility index is down. We saw that. Fear is down. US dollar has weakened some, which allows anything paired against it to rise a bit easier. With the inflation that we've been seeing in the US dollar, meaning a weakening of the US dollar in general with all the stimulus over the pandemic months and really years now, it's been easy for oil to climb, for the stocks to climb, etc. Now, eventually that could wear out. And, we look at this chart and we say, wow, that looks like an uptrend that could just continue, right? Where's the resistance? Do we see any resistance over here? And we do if we look at bigger candles. So sometimes to decide technically, when might I want this? Maybe I want to short this, right? When might I want to do that? We need to look at maybe a bigger picture. And how do you look at a bigger picture? Larger candles. Instead of 1 hour, we look at 4 hour. I still don't see resistance, right? So let's go to 1 day. Now I can try and find some resistance, right? The 1 day candles show that the next resistance is up here. Okay. On the US 500, we don't find resistance until over 4,540, let's say 45.45. So if nothing changes the current momentum on the market, we don't find resistance on the US 500 until around 45.45. Okay, and we're at 45.08 right now. So we're talking another 35 points plus before we hit the major resistance. Okay, now we did say it's mixed news, right? There are inflation fears out of the US. There are fears about supply chain bottleneck. There are some things there that might keep the markets from breaking these all-time highs that we see on the 1 day candles. Okay, so what kind of pending order could you put from maybe just below these all-time highs that if the price does make it here, we might think there's not enough momentum to break that because of the mixed news we looked at. If the price does reach that resistance, and it might not, but if it does, what kind of pending order would allow us to program right now that if it gets near this resistance, we want to sell? Does anyone know what kind of pending order sells from a higher price? There are 4 kinds of pending orders, so I can bring them up. And if you would type OK again, I have someone else saying no sound. I don't know, this isn't typical, but I have a second person saying that. Okay, never mind. I know you hear me because some of you are answering the question. So again, it's just an individual who, this time it's Isaac, who doesn't have a good connection. And everybody who's answering is correct. It's a sell limit. So I'm letting Isaac know it's just him now who can't hear. Okay. So yeah, sell limit. So how do I prepare a sell limit? Very easy on the MT4 platform. All I have to do is open the order window. So I can click new order for the S&P 500, the US 500, switch from market execution to pending, switch the type of pending order to sell limit, which sells from a higher price. Thank you. Some of you, there's a bit of a delay here. Some of you are answering my second time I asked if the sound is fine. So thank you for confirming that. All right, so just before this resistance then would be what, 45.40, let's say. 45.40. We might then put our stop loss, I don't know, 10 points up, 45.50, maybe 45.45. 55, something like that, 45.50, let's say. So we're risking 10 full points to the stop loss, and our potential profit, if it drops, let's say we go to 4,500 even for a take profit. Okay, so going after 40 points profit, risking 10 points. Okay, so there's my pending order. And you say, wow, why not buy at this point if you think it might go up to this resistance point? And my answer is you certainly could. There's nothing wrong with buying now, but because it already rose so much, you see climbing, and it's on a day with mixed news. Sure, a little more positive than negative. Volatility index is down. Fear is down a bit. There's not a huge amount of momentum with it. We can see that. So it's not like volatility is down 10% or 20%. It's down 3%. And so there's not a huge momentum. So this momentum could run out before it reaches that resistance level, which means then we just don't place a trade if it doesn't reach our sell limit. To buy from a high point when it looks like perhaps the momentum is slowing, that's up to you. It's not my preferred method in terms of the strategy we're looking at. It seems more opportunistic that if we could catch it near this resistance, then you could short this with only having to risk a little bit to get your stop loss above the all-time high with a much larger potential profit without having to break any support levels. Okay, you see we put our take profit just before this old resistance that we see here, that when it broke through, it became support over here. So this price could act as a support level. And so taking profit there, the scalper in me says that's a spot where you could take profit before it would have a chance to bounce back up. Okay, so we're going after about 4 times the potential profit compared to risk, and trying to be patient to see if this momentum today can make it near these all-time highs. Then we get in to try and short the market from an opportunistic spot. Okay, that's the technical strategy here. And as you look at this, you might say, well, my stop loss, maybe it should be a little higher, a little bit further past these wicks. And there's no problem with that. Just drag your stop loss a little further up. And now we're clear of these all-time highs by a little bit more. Okay, so now you're a little more secure with the stop loss. I'm risking a little more, but still a lot less than my potential profit. Now, if you feel this momentum also could continue, then buying on this makes sense. To buy and put your stop loss just below this old resistance level, which should act as support right now. Put your stop loss down below that if you're feeling the momentum could strongly continue up. Okay, but there's a trip line in the market waiting for an opportunistic entry point based on our technical analysis, and it makes sense with the fundamental news as well. If anyone wants to request an instrument, by the way, you can go ahead and do so. Let's take a look at maybe gold. So let's again go to maybe the 1 hour candles. And I've got some pending orders here. Let me just get these out of the way, or a pending order, I should say, on gold. Let me just get it out of the way. We'll start fresh, and we'll leave the sell limit that we just created on the US 500. Okay, so wow, what an opportunistic spot if you think there's reason for the US dollar to continue to have inflationary pressure. Okay, you know, the US is, you know, they just worked on increasing the cap on their deficit limit, and they're working on trying to pass a multi-trillion-dollar budget that they have a lot of infighting on within the Democrat Party, and the Republicans are, you know, usually against really large spending bills. And so that hasn't passed yet, but there's a potential if they start to have some progress on a big budget deal in the US, which they still need to pass. They kind of kicked the can down the road recently with a temporary budget. If they pass something that's somewhat large, you could see a rapid weakening of the USD again. It's possible if they had passed trillions and trillions in budget. meaning a lot more printing of US dollars and a lot more spending, which would weaken the currency more. So if you believe there's that in the future, and also leading towards the end of the year when many times people start to sell off riskier assets and instruments and buy into gold, there's a lot of times that seasonal effect as you get towards January, near the end of the year, there could be reason for gold to climb against the USD. Okay, so you might see today's pullback and drop in gold as an opportunity to maybe go long on gold. So fundamentally, that could make sense. And we see the US dollar weakened a bit today. Okay, so and gold still managed to pull down. So it could be an opportunistic spot with a relatively weak US dollar, catching a low point on gold. So, and by the way, it's not usually the way it happens. When the US dollar is weak, usually gold would have already went up, which it did earlier today. But look, for the last 1, 2, 3, 4, 5 hours, gold dropped, maybe giving you an opportunistic spot to buy right now on gold if you think US dollar should continue to be weak. As fear is low, US dollar tends to be weak. And so let's say you buy on gold right now. I don't know, one lot, a tenth of a lot, whatever trade size makes sense for your account, obviously. And then we take a look at the technicals and I say, okay, I can just drag my stop loss off my entry point to get below these low points. Okay, the low point of today, the low point of the week. I've got my stop loss below all of that. It would have to break this support area to hit my stop loss, right? And I'm only about $10 down, less than that, to my stop loss. Okay, I didn't have to risk much per ounce of gold to get my stop loss below this whole support area here, these low points. And so if I go to 4-hour candles, now I can see where I put my stop loss line is just below this low point where it bounced back up. And so if we look further now in the 4-hour candles, we see that is an area of support. Once the price back here in the 4-hour candles last week broke above this price, you see it became support, support, support. It went up, came back down. You see the bounce here, right off of it again, support, and back up. And now it tested this area again and found support in that area and went up again. So that's what we call a technical support level, okay? And so someone's asking, Henry, you're asking, can gold still drop to 1750? Heck, gold could drop to 1200 an ounce. Anything is possible, right? But when you're trading, you have to look at what's the likelihood in your mind of a certain price level holding or of reaching a certain price level. And you need to combine both the technical analysis, which we're doing now, with your best take on the fundamental news situation as well. And right now we know fear is relatively low today. And there's some positive momentum on the markets. And the US dollar is relatively weak today. All of that tends to cause gold to go up. If the dollar is weak, that means maybe there's some inflationary fears. Gold is the #1 safe haven against inflation, against a weakening US dollar. So when there's fear of economic downturn, people don't tend to run to gold. But when there's fear of inflation, weakening of the US dollar, or of currencies in general, meaning there's a lot of stimulus being handed out, the markets might be roaring up, but gold can go up at the same time, which is what we've seen this past year. The markets and gold reaching all-time highs at the same time. Why? Because easy money was being handed out. Markets love the easy money, the free money, the low interest rates. US dollar gets weak under all of that, and so do other currencies. And so as the markets went up, people were also buying gold, okay? And so if you feel there's still a reason for inflation on the US dollar, then maybe you like this support level even more. A purely technical trader would have bought off this support level like I simulated here on my demo account, would have bought off this support level anyways, and maybe put the stop loss where I did, only $10 an ounce down. Small risk. So technically, it's a nice support level. The 4-hour candles confirm that. Multiple holds of this price around 1760 or so. Now, we say, well, where should our take profit be? And my answer would be, well, it depends if you're scalping, if you're a day trader, or if you're a long-term trader. Okay, for the sake of this webinar, I'll say I think gold could easily come up and reach the high that it was already at today, right? This was the high today, right up here. Here's the resistance that it found today before dropping. That already gives you a larger potential profit compared to risk, right? Better profit potential than risk, and I don't even have to break the high that it was at today. Nothing new has to happen for gold to establish to hit my take profit. It just needs to redo what it already did today on the current news that it already made that movement on. So this is the power of combining fundamental news with technical analysis. We can see why gold went up. US dollar was weakening today because fear was down. People were buying into the stocks and getting out of the US dollar. So the dollar naturally weakens as the stocks go up. And when the dollar weakens, there's fear of inflation, and so gold naturally went up as well. It pulled back down, opportunistic entry point. Our technical analysis says, wow, that's a deal, small risk, larger potential profit, and you see it's off and into profit already, right? Now, you also could say, nah, I don't want to take profit so quick. I'll actually go and say it'll reach the high that it hit this week up here, okay, or last week up here. And so this is the next resistance level, and maybe I take profit at this one, just before that resistance, which now gives me what? 2 or 3 times the potential profit compared to risk. And that doesn't keep you from maybe saying, if you see the price get up near the first resistance, you could do a partial close, right? You could do a partial close when it reaches the first resistance and let the rest ride to the next resistance level. Yeah, Natalie, it's all relative, right? You're saying small reward. It's a small reward depending on 2 things. What trade size did you take? And are you putting your stop or your take profit at the first resistance? Or are you putting your take profit at the second resistance? Or am I going to something like 1-day candles and putting my take profit up here at this resistance on the 1-day candles, right? Here's resistance that is established on 1-day candles. Resistance, resistance, resistance. Every time it hit this price in the past weeks, it dropped back down, right? So now my potential profit is what, 6 times, 8 times what I'm risking, right? So Natalie, if the $20 per ounce movement you see as a small reward, then you're probably a longer term trader. And you're looking for taking profit maybe up here around 1825 at the next resistance level, or the second one that I showed you here, right? And it's all up to the individual trader. Some traders would have already closed it. Take my $100 profit right now, right? And by the way, I would leave this run probably. I feel like it could keep climbing, but I want to show you how to do a partial close. So I'll demonstrate a strategy here where I can do a partial close. Let's go here. Whoops, not there. Let's go to the trade down here, sorry. And go to modify or delete. And then I change from modify to market execution. And now I have the option to sell, buy, or close. But I can close any amount of this trade that I want. So instead of closing the full lot, let's say I close 0.40. Okay, I'm going to close, and now it tells me close, has my order number, the buy position, I'm going to close 0.40. Whatever I put here, that's the amount of the trade I'll close. So let's say I close 40.4 out of one full lot. That's 40% of the profit that you see here is about to go into my balance. So I click close. Now you see 73 in profit. That's because 40% of it just went into my balance. If I go to my account history and look at the bottom, there it is, $48.10 from that gold trade just closed 0.4, okay? And if I go back to the trade, I see I only have 0.6 running now. So I already pocketed some profit. Now I also could move my stop loss up to entry price. Okay, now my stop loss is at my entry. I have guaranteed profit. I can let it run. Maybe it goes flying the right way now. I'm at zero risk and guaranteed profit, right? Unless it runs for 4 or 5 weeks and I slowly collect overnight interest that exceeds the amount I just pocketed. But that's unlikely that it wouldn't in that length of time either hit my stop loss that's at entry or my take profit that's not that far up, because gold really moves quite a bit typically. Now, like I said, under normal circumstances, if I wasn't just teaching right now, I probably would have let the whole thing keep running for a while, right? But I want to make sure you all know how to do a partial close and the idea of moving your stop loss up. Now, it easily could come down now and hit my stop loss before going further the right way, right? By moving my stop loss up so soon, I could cost myself potential profit by getting my stop loss so close now. So I don't like to do that method too early. I would wait quite a bit longer and keep my stop loss where it was typically till it's further into profit anyways. But each of those types of moves is up to you as a trader. How much profit do you want to be guaranteed? I think to Natalie, it was way too small of a reward that I just put in my pocket, right? To a scalping trader, they'll open and close 50 trades like that a day, and they love that size profit. So it just depends on your preferences as a trader, but I want to make sure you understand how to do the strategy. It's up to you, the exact spots you would prefer to get in and out, obviously. Okay, so someone asked for crude oil, so let's have a look at crude oil. And the question that went along with asking for crude oil was, does crude oil go up as well when gold's going up? And I say sometimes. That's the answer. In general, yes, crude oil rises when there's inflation fears about the USD. Why? Because inflation fears about the USD makes people sell the US dollar and buy other instruments. If the fear is the US dollar will weaken from too much stimulus being handed out, etc. And so if the US dollar weakens, well, crude oil is paired against the US dollar, so it tends to rise more easily. And then you look at the fact also that why is the US dollar weakening right now? It's from positive momentum about earnings season and the economy doing well. And what happens when the economy does well? There's higher demand for energy, right? And so if there's a higher demand for energy, speculators tend to buy oil because they believe oil prices will rise. And that belief in and of itself causes the price to go up because the speculators are buying it, anticipating a rise, and that drives the price up. So economic optimism and a weakening USD tends to drive oil prices up, just as it's driving gold up many times. Okay, and same for natural gas and other commodities. So a weak USD creates the environment, when combined with positive economic numbers, the environment for crude oil to rise. And so we see that it's done that. But what's interesting is, look at the resistance level on crude oil right here. 4-hour candles, resistance, 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 and dropped. And now it's getting near this area, and you see the wicks. It's having trouble holding this price. It's testing, and I don't think it's done testing. It's going to test this price again, okay? If you believe that the momentum could flip right now, right? If you believe that fear could hit the markets again, that fear would strengthen the USD potentially and drive oil back down, right? But you'd be guessing the fundamental news, right? You'd be guessing that maybe the US dollar will strengthen back. Maybe the headlines will flip. And we did see some negative headlines about the supply chain crisis, right? It's not going away anytime soon. Labor shortage, that's not going away anytime soon in the US. And that's the largest economy in the world. And so you might say, hey, this is worth a shot. Let me short crude oil. And whatever trade size makes sense, again, for your risk appetite, for your balance, etc. So let's do 500 barrels on the demo here. I sell on crude oil, and I say, you know what? I don't think the momentum's there to break the high that it hit this week. If that's what I believe, then hey, this is an opportunistic spike in oil with today's optimism, moderate optimism, right? We agree on that coming into this. It's not overwhelming upward momentum right now. There was some upward momentum today. So maybe you think, hey, I'll put my stop loss above this week's high. And maybe you believe it's not enough momentum today to break that. In fact, potentially, maybe crude oil pulls back down to this support level right down here that it was at, what, 4 or 5 hours ago. You know, these are 4-hour candles. Look where it was 1 candle ago. It was hitting right down here. So now we're going after a potential profit that's more than double the risk. And you don't have to break any support levels. You don't even have to break today's low to make that profit. So technically, this is an opportunistic entry point with the technical strategy. It's a spot that it already hit not once in the past day, but 2 times, 3 times it reached this price in the past 24 hours. So if the news doesn't have big momentum, and if no new headlines hit, you'd think crude oil might have trouble reaching a high that's above this week's high without big momentum, and that it easily could pull back down towards the low that it already hit today without having to break the low if you put your take profit before the bottom of these wicks. Okay, maybe I cheat this up just a little more to be above today's low on all of these wicks and be able to take profit with more than double the potential profit compared to risk. You know, when you start entering into trades like this, you more times than not very well may see that your trades start out in the right direction early on. And that's where scalpers, they take that momentum, that resistance level, that support level, and going in the direction of the fundamental momentum as it exists, and take that profit before the news can change. Okay? So a lot of times you can get quick open and close trades and have a really high win percentage if you combine 2 things: the current fundamental news situation with proper technical entry points. All right? And you don't always have to trade in the direction of the momentum. Like today, the momentum was up. If you understand that it's weak momentum and that you're likely to see ranging movements moving forward unless the news changes, right? So ranging movements are exactly what we're seeing. And I mentioned that as we started the webinar and we started to look at the news and we saw there wasn't huge momentum. And I mentioned, well, maybe we could see ranging movements. That's this, where it goes up to resistance, back down to the support, back up to the resistance, and maybe back down to the support, right? That's ranging between a range, an upper limit and a lower limit, up and down, up and down. That's what happens on a day where there's not huge breaking news or where there's mixed fundamental news, some good, some bad, and the market just doesn't stay in one direction for very long. Okay, up and down, and that's what we see right now. Okay. The next request, let's see, a quick look at USD Canadian was asked. Instead, we're almost out of time. So instead of looking at the USD Canadian, let's talk about the USD Canadian. What does USD Canadian have to do with oil? And before anyone types the answer, I'll say crude oil is the #1 portion of the Canadian GDP. They're exports of crude oil. So if crude oil's up, the Canadian dollar tends to be strong. And if crude oil is down, the Canadian dollar tends to be weak. Okay? It's not exact 1-to-1 relationship, but that's the general trend. Okay? And you know what? Why not? Let's take a quick look at USD Canadian. Let's go to 1-hour candles. And you see the US dollar gained against the Canadian. And now the Canadian is starting to pull the US dollar down. Well, oil's up today. And the Canadian's just now starting to pull the US dollar down. So that might be viewed as opportunistic, right? So if I sell on USD Canadian, it's with the understanding that, hey, oil is strong right now. It's up. It's up near the resistance. And the Canadian dollar didn't strengthen yet. So it should strengthen if oil's up. And so this is an opportunistic entry point, both fundamentally speaking and technically. So fundamentally speaking, because the Canadian usually pulls the US dollar down when oil's up, and oil is up, but the Canadian dollar didn't pull the US dollar down yet. So you're getting an opportunistic entry point where you expect maybe the Canadian dollar to pull the US dollar down, right? So I take this stop loss, I put it above, maybe not all the highs, not these highest wicks, but above this resistance I see here. Resistance, 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 and dropping. And my take profit, maybe I say, you know what? US dollar is relatively weak today. I put my take profit down before today's low. Okay, just 1, 2, 3, 4, 5, 6, 7 hours ago, it was down below my take profit price earlier today. So I've got a much greater potential profit compared to risk. Same setup technically, fundamentally, maybe the news is on my side as well. And this is a natural hedge, by the way, because aren't we shorting oil? We're shorting crude oil. And so if crude oil goes up and we lose on the crude oil, well, then that makes our sell on the USD Canadian more likely to win, right? If oil goes up, we lose on our sell on oil. Well, then, hey, the Canadian should even more likely strengthen. And then maybe we win on this one if we lose on crude oil. And the opposite, if we win on this one, or I'm sorry, if we lose on this one, that would mean that maybe crude oil is weakening. If the Canadian is losing ground further to the USD, if this goes up and loses, then maybe that means crude oil is going to drop back down, right? If the Canadian weakens and the USD Canadian goes up, then maybe that means we're doing even better on our sell on crude oil, and we only need to win one out of the two because we've got a better profit potential than risk on both of them. So winning one out of those two should bring an overall profit if we take the right trade sizes, right? And we're probably unlikely to lose both because it's a natural hedge. If one of them goes the wrong way, the other is even more likely to go the right way. Type OK if you're with me on that. The fundamental hedge that we have there with going against crude oil to drop, but going with the Canadian dollar. Or type questions if you have them. Let's quickly go to the Tech 100, which was asked, and that will be the last one we have time for. I've got the FTSE US 30. Let's find the US 100. US Tech 100, otherwise known as the NASDAQ. We're looking at NASDAQ uptrend, right? We already saw the uptrend. We know. We know why. Fear is down, etc. 4-hour candles. Wow, it just looks like an uptrend that might never end, right? I don't see any resistance over here. So let's go to 1-day candles. Now we find the resistance, right? So on the 1-day candles, I see resistance right there. Okay, you see this candle hit here and plunged. And in fact, if we follow across over here, it matches this resistance. So 1-day candles, resistance, resistance, down. Then once it broke above this price, it became support, 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 support. These are 1-day candles, support. Once it broke this price, it becomes resistance again here. Resistance, 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 and down. So classic situation where once the price was broken from underneath, the resistance became support. And once it was broken from the top, the support became resistance. Okay, that's the way support and resistance levels tend to work. Now we're finding that resistance again, and the question is, will it blow through the resistance or reverse? And again, we've kind of agreed the momentum's not huge today. Might be hard to break the resistance. Doesn't mean it won't happen. But if we go to 1-hour candles or 4-hour candles, we don't see a reversal yet. We don't see a reversal in this. It's still trying to climb. What kind of pending order could you put maybe at a price above this resistance that if it breaks the resistance and hits up here, it buys? Buying from a higher price. What kind of pending order could you prepare that if it does break through this resistance, then you buy? With the idea that it could carry on to the next resistance level up here near the all-time highs. That's a buy stop. Okay, buy stop pending order, buys from a higher price. So you could put a pending order up here to buy if it breaks through the resistance. And at the same time, you could sell with a market sell. So you could do a couple things here. I can say, you know what? I'll take a quarter of a lot and sell, market sell, and put this above the resistance level that we're pointing out. Resistance on the one-day candles, we do market sell because we say, hey, the momentum's not that big today. There is some fear on the markets for supply chain worries, etc. So maybe we take a shot and say maybe the one-day candle resistance won't break, and you take a shot at selling with a limited risk with your stop loss above that resistance level. And at the same time, if this does go up and hit your stop loss, you could have a pending buy stop to buy then. To that quick with limited risk, switch, get out of the sell, and boom, your buy stop gets you in on the buy if it breaks through that resistance. Okay, kind of a 1-2 market move sell, pending order buy if the market move goes wrong. All right, I'll just leave the market move for now. Maybe I find a take profit down here just before the support level right there. Okay, we see a support level here. Once it broke above here, it found support at this price, support, and then went up higher. So over here, I followed across and I say, if this does drop, that's a spot where maybe, 2 times the profit compared to risk could be a nice move if we get a pullback in the momentum today. Okay, so we've diversified. We're going with the momentum on some, only with the opportunistic entry points. We're waiting for prices with some pending orders for reversals potentially, etc. So the idea here is you're not going to be right on every move. But if we can find even 50% accuracy when we have double the potential profit compared to risk by using proper technical analysis, then overall you profit. It's not about being right more than you're wrong. Sometimes it's more about making more when you're right than you lose when you're wrong. And in that case, you don't even have to be right greater than 50%. But when you combine the fundamental news with the technical, hey, maybe a monkey could be right 50% of the time or better, right? So I think you'll see a lot more movement this evening and through the rest of this week, because there are a lot of headlines about this supply chain crisis and the budget battle in the U.S. The COVID story is still there. So I think you'll get some great price action and movement at some of these price levels that we're identifying. So set your pending orders, make your market moves. I think the profits are there to go after. All right, everybody, thank you for joining. Good luck with your trading. And we'll be back at it earlier in the day, 11 UK time on Thursday. Till then, good luck.